Hi, Tony Gerard, Echo Summit Property Management, and today we're going to be speaking about factors that influence market rent or the rent that you could potentially charge for your specific property. Let's back up and say there's a lot of conversation, a lot of discussion, a lot of sound bites about market rent and occupancy and how everything, the occupancy is up and market rents are up. And I will say this. You will have to look at the particular area that you're in. Factors to consider such as geography, and we can say geography at the city level. I will say take it down to the micro sub-market level. You have market prices per square foot or rents per square foot, etc., whatever you want to call it, that can vary block by block. That's how close market rents sometimes change. The other is, what kind of properties are you comparing? Are you comparing apartment buildings to houses? Are you comparing Class A properties to Class C properties? New properties to, let's say, a vintage type property? Large 3-bedroom house to a 1-bedroom bungalow. You've got to look at all of those different variables and how they interplay amongst each other. Also, what is the market in that area? Is it a high income area, low income area? Is it in demand? Is it growing in demand? Things you want to consider. So you need to look at all of those different variables to consider. One of the pieces that you want to do is you want to do your research. And there's a lot of ways you can do that kind of research. Some areas have actual surveys that are done, whether they're done by local universities or real estate agencies or banks. The information's out there. Now, again, to my earlier point, it may be too high up, it may be too macro, but at least it'll give you a baseline of where you can see where the area is going to. Then you may want to go down a few levels. Some of the very easy ways to get some market information is, for example, let's use the internet, Craigslist. You can just type in a certain geography that you're looking at, see what's going on in that area, see how many postings, see how much people are charging for what kinds of properties that are out there. That gives you, again, a very good baseline to really start making your opinions of what you think your particular property or apartment building might be able to charge as you go forward. One of the things that you really want to really recognize is there is no substitute for you knowing the area that your property is in. Drive around, walk around, call around. Here you'll get first-hand experience of what is going on there. Talk to people. Also, as you advertise your property and people come in, ask them what they've seen. What kind of prices have they been looking at, etc. Again, this is real-time data that you get. There is no substitute, and you can't put a price on that kind of value. Now, I'm going to also point out that market rents can change like that. And let's use the 2008 recession as the best, worst example of this. And I remember it vividly because in August of 2008, and this was my analogy I used, I said it's like somebody turned the light switch off. Our entire traffic stopped. I mean, something was wrong. It was like, what was going on? And then September, October, November, things got progressively worse, the banking crisis, etc. During this period of time, we were doing what I would say chasing rents downward. And I mean, as fast as you're cutting by 10, 20, 50% on certain properties. You are cutting these because you were chasing the market downward. And the two areas of the market that got really hit during that period of time were the high-end properties, because they were lowering their rents because they had a lot of product and they really wanted to move it. Things that may have been renting for $1,000, $2,000, $3,000 were having to drop. The other piece was the real entry-level economy play type product, where that's the market that had the most significant downturn in terms of employment. So you had people that were out of jobs just like that. And so it didn't matter what you were charging. You could be charging $400 for an apartment at times, and you couldn't find a renter for it because they weren't qualified. Here we have a market changing around, where you can read studies and reports and newspapers that say the market's better, and occupancy is at its highest level in years. And I will tell you, read it, but read it with your eyes wide open. In certain areas of certain geographies, absolutely true. We're chasing rents up. You can't go fast enough in some areas. However, remember, we've got an unemployment rate that's somewhere in that 8% range. And when you really delve into the unemployment statistics, what you also find is that there's two big groups. You have the college-educated professional group that has an unemployment rate that may be in the 2-3%, and then you have the area of, I have a high school education, I work in the service industry, construction, etc. That unemployment rate is 12, 13, 15%. So if you have a property that's in an economically challenged low-income area, it's going to be harder to find qualified people in that area. Now you'll find them, it's just going to take more time. You also won't necessarily have the rent traction and occupancy rates that you would like to have if you compare yourself to those areas that are in high demand, that everybody wants, and that are more affluent. So consider that. So again, my closing statement on this is know your geography, know your product, and know your market. For this or more information, please look us up at www.echo-summit.com/education. Thank you.